Lindsey Piegza is the chief economist at brokerage firm Stern AG. I spoke to her about the U.S. unemployment situation and the jobs numbers that's due on Friday. Analysts expect 200,000 jobs were created, but Ms. Piegza says that's just not enough still.
Well, typically what we think of is we need 250,000 jobs created on a monthly basis just to cover demographic change. So think about all the first-time entrants, think about all those college graduates entering into the labor force. We need 250,000 just to cover those new entrants, those first-time entrants. So if we add in an additional growth on top of that to start absorbing some of those jobs lost during the recession, well, now we're talking about 350,000 on a monthly basis. And again, over the past 6 months, we're averaging at just 195, so less than half of what we would like to see at this point.
What needs to be done from a policy standpoint here in Washington, D.C.? We talk about Congress, we talk about the White House a lot. What needs to be done, in your opinion, that would help move that ball forward?
Well, you know, really, aside from my opinion, talking to business insiders, looking at small businesses that would like to expand, they have a lot of cash on the books, they're looking to take on that new factory or that new storefront, they're saying that the #1 reason they aren't expanding and they're not hiring is because there's so much uncertainty out in the marketplace right now. And what do I mean by that? Well, certainly, it seems that we have some certainty in terms of a fiscal year for 2014 and 2015 in terms of taxes and spending, now that Washington has battled out a bipartisan budget, but we still don't know what our health care costs are going to be, how much costs are associated with the Affordable Care Act, with providing full-time insurance for all full-time employees. So a lot of businesses are just saying we have so much regulation coming down the pipeline, we have so much uncertainty surrounding the Affordable Care Act that right now I just can't commit to expanding my employment base. And so I think once we get some certainty surrounding those new regulations coming online, that will loosen up some of those corporate purse strings.
Now, there is some certainty. For example, Janet Yellen will take over from Ben Bernanke at the end of this month. Most people expect basically the same type of policy that he's worked on at the Fed. What would you tell Janet Yellen in terms of should they keep cutting back on the stimulus program, or should they even start looking at rates at some point? But if you've got a negative outlook, that might change it.
I think what I'd say to Janet Yellen is, just as she said in the past, again, she wants to keep an eye on the broader economy, not just focus on 1 or 2 indices in the labor market. And she's made this pretty clear that that is her mode of operation right now going into that chairmanship position. So while the Fed has already initiated tapering, which I would have argued we should have pushed off for another quarter or two, it's going to be in very slow increments, allowing the economy to continue to gain momentum. But she's also said that if the economy takes a misstep or if the economy takes a sidestep, that she's very well prepared to halt those tapering initiatives at the subsequent meetings, meaning that they are going to remain very data dependent and continue to watch the improvement or the assumed improvement in the economy going forward.
You have a very unique viewpoint because you look at the data in great detail. What sectors, in your opinion, in the United States are doing well and which ones perhaps are not?
Well, I think there's 2. First of all, manufacturing. Manufacturing has consistently been a silver lining to this recovery. And in fact, as we went into the end of 2013, purchasing managers said that year-end orders were at near 2 or 3-year highs. So that's very encouraging, especially when we look at the backlog of orders going into 2014, suggesting that as the consumer, the domestic consumer, continues to gain momentum, coupled with very modest but positive growth overseas, we will expect to continue to see a ramp up in manufacturing production here in the U.S. So that's a very clear silver lining. The other, I would say, is housing. Now, while we have not seen the contribution to GDP as we did during the housing run-up, talking about 6, 7, 8% contribution to GDP, we are seeing consistent positive momentum. So housing is certainly no longer that large negative drag on the economy, and it's slowly becoming a positive, consistent contributor to growth. And again, I think as the consumer continues to clean off their balance sheet and they're able to take on new amounts of debt, specifically mortgage debt, this will only further propel the health of the housing market and the health of the overall U.S. economy.
That was Lindsey Piegza, chief economist at Stern AG from Chicago. Thank you.